Good morning, traders, and welcome to the Daily Call today, Friday, the 22nd of March. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's happened overnight. Most of the data, or the most important data, came from the UK. We saw the retail sales number come in at 0.4%. That was better than the forecast by some amount, so that was positive news. The official bank vote was unanimous. All MPs voted in favour of keeping interest rates unchanged at 0.75% as the Parliament continues its target towards 2% inflation numbers. So overall, the news was positive for the pound overnight, but nevertheless, it lost the most amount of ground for this year against the US dollar. So what caused the fall in the pound? Well, essentially it was from the EU summit, where the extension for the Brexit negotiations have been sort of not approved, so to speak, and they are quite conditional based on the conditions that the deals that they put forward do get passed through. In those conditions, they would get the extension. So basically what that means is leave without a deal or take the deal that we have. So it was negative impacting news. It's not official, and there could be an emergency summit now required to sort this mess out. Look, that Brexit saga is quite hard on the pound at the moment, so regardless of all this positive data that came out, that still supersedes everything. So that's what's happened last night. Locally, from Australia, we had the employment change number. We missed the mark there at 4.6 thousand jobs compared to the 14.8. The unemployment rate did go down slightly to 4.9%. Aussie dollar lost ground against the US overnight. Okay, that's all that's the majors that happened last night. Let's have a look at our chart of the day. Incidentally, the Kiwi US chart that we've been looking at, if you readjust the top line, it's still on the card, so do not remove it from your hot list. It could still come into play, so just keep it there. But I found another chart for us this morning. The one that I found is the GBP AUD. Now, I do understand it is a pound pair, so if you feel uncomfortable about this one, that's okay, just sit it out. But nevertheless, it is a really nice looking chart. That support line at the bottom is, pretty much classic. What we would need on a daily chart is now to complete that price action reversal. So we would want today's candle to be an inside candle here, and then we'd be set, ready to go. Alternatively, if you're a little bit trigger happy and you really want to jump on straight away, let me zoom into a 4-hour chart. On a 4-hour chart, I've already got the inside candle situation, which basically means in about 27 minutes, when the new candle opens, we can place our pending order at the break of the inside candle on the upside, and it too would be a legitimate trade based off the 4-hour chart instead of the daily chart. So there you have it. The chart of the day today is GBP AUD on a daily and a 4-hour. You choose the one that suits you. Let's see how that one plays out. What's on the card for the final session of the week? We have this evening at 7:15 p.m. from Europe, France specifically. We have the Flash Services PMI number due. 15 minutes later, we have the manufacturing and the Flash Services PMI from Germany. So any Euro traders, just look out, because these two are quite impacting. Then at 11:30 from Canada, we have CPI and core retail sales numbers, which are due. That pretty much wraps up the session. Guys, as always, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you'll have a fantastic trading day. Have a great weekend, and I will speak to you on Monday for the Daily Call. Bye for now.